Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Matt, the mortgage guy. How you doing, buddy?
I'm doing good, Mike. How you doing?
I'm doing well. Something we haven't done in quite a while is just take a fictitious buyer, kind of put them in the system and look at what conventional rates might be. So why don't we just kind of talk about the standard rates, owner occupant buyer, decent credit, looking to buy a home. What kind of rates? This is obviously not a quote or anything. It's just, so people can understand the ranges available.
Right. Yeah. And I'm not offering anything, but I'm going to give you, true rates. I actually priced like a 5% down for somebody with a 760 credit score. And this will be a range. So it's not an offer to lend. It's not specific. And side note, caveat, if you haven't worked with a mortgage broker in the past, there are some cool things going on with mortgage or margin compression and broker price battles. You can go to Mortgage News Daily and see the average 30-year at 5.95. And the broker side, I shouldn't say probably, I am in the mid fives, like no cost at 5.5. So I think it's important for people to not only know these numbers, but plug these numbers into what you're buying to see what that actually means.
Exactly.
Because I can tell you, Mike, over the last week, I've had too many conversations where they go, $3,400 a month. And
sorry,
like, I'm just the messenger, right? I wish I could get you 3% money, but I can't. It's 5.5. And we'll talk in another video about some strategies to get it into the 4s. But, 30-year fixed money without paying, points or fees, somewhere in the mid fives, 5.5%.
Okay.
And then if you do 15-year, which I see very little of, when there's affordability issues, like people aren't leaning on 15s, and when the spread is smaller, the 15 years about 4.625.
I would have expected more. So it's not even a full point delta.
Not even a full point.
Okay.
And you might find it 3.5 at, if you shop around or something more, you can buy it into the 3s by paying points. But for the most part, it's less than 1 point delta, which surprises me too. Because we had a 1 point delta when rates were 3.5 and 2.5 on the 15 and the 30. So when they go up, you expect it to be a bigger delta.
Yeah, wider.
It's really not. And there's not an appetite for those 15 years.
And then what about arms? Because again, arms, sometimes arms are the answer and sometimes they're not. What do they look like today?
Right. And this was a scenario I went over with somebody yesterday where they asked my team for some side-by-sides and we provided them and they go, well, wait, it's the same.
Yeah.
Why would I do a 5 or 7 or 10-year arm when it's the same price as 30-year fixed money? And my answer is right. Just do the 30-year fixed money. And this is specific to conforming conventional stuff. Yeah. It's for all intents and purposes, the same price. Where you see the arms being written in my business, where we were writing all the arms, is in the jumbo space.
Yeah.
In the jumbo space, you get 0.75% or a full percent lower in rate, writing a 7 or 10-year arm. It's a really significant savings.
Yeah. So again, conventional being what, below 600K, something like that?
Well, 647, 200, like nationwide. Then you've got like different
high desert, high balance or whatever. But
yeah,
so conventional meaning so again, if you're getting a 5, 7 or 10-year arm conventional loan and it's the same rate as a 30-year fixed, let me be very clear. Don't do that loan.
Right.
Under any circumstances, don't do that loan.
It would be kind of silly to have the money be the same.
Interest rate risk for nothing.
Right.
There's no reward for risk.
Yeah. For people too, I try to give the advice where it's like, you want to get into a loan, even if you have a plan to get out of it, that if you stayed in it.
Yeah. Downside protection
isn't going to kill you. Right. And so, that's what some of the talk is too. And I'll speak on this real quick. When rates go lower, I'll refinance.
Yeah, I hear that a lot.
Great plan, but don't depend on it, right? That is the same talk track that happened back in the day where it's like, no matter what the terms are, sign the dotted line, we'll refinance you in 6 months or a year when things get better, your job, improves. Don't depend on that.
Yeah.
The loan you sign today, I know that data says you won't be in it for more than 3 to 5 years, but make sure, to your point, downside protected, that this is a loan that you can sustain. You've got job stability, got all the other stuff. And, one thing I wanted to do real quick, because we didn't talk about it, was price an FHA loan too. Because these, Mike, are coming back.
Oh, yeah, I agree. I think FHA and VA buyers are coming back. Absolutely.
Yeah. And for a lot of buyers, they're less credit sensitive.
Yep.
You could have lower credit and FHA is not going to, ding your rate. If you've got a 645 credit score, your conventional mortgage insurance is going to look a lot higher. The rate's going to look a lot higher. And FHA is going to say, come on down. Not only, are we less, sensitive to your credit score, but also your debt to income, we're going to be able to stretch a little bit more too. So without paying any points, you could get like a 4.6 on an FHA deal. And
so tell me about an FHA deal that's different than conventional. Is it more down?
No, I mean, you can do 3.5% down FHA, home buyers that are putting lower down payments on conventional can do 3-5 percent down.
So you could get an FHA loan in the 4s.
You can get an FHA loan in the 4s. And, I could show you, what it would look like with buy down, but FHA specifically is not a long-term loan. So I don't recommend buying that rate down because over time, you're going to gain equity. Hopefully your credit score improves and you're going to remove that mortgage insurance and refinance out of it. So FHA, the average length in that loan is even shorter. So don't spend a bunch of money up front buying it down. But in a market where things are starting to sit for 20 days, 27 days, you submit an FHA offer. Last year,
you were laughed at. Yeah.
The seller had 17 offers to choose from. And they just said, listen, we've got 4 or 5 really good conventional deals. Even if this FHA deal is 5,000 more, let's regardless of whether or not that was right or not, that was the mood of the market. So FHA is going to make a comeback. So
yeah, I think FHA and VA buyers, if you're still interested, your time's coming. Again, you may be the only offer. Again, I'm telling everybody, don't even bother offering on first day listings anymore. Look for the older listings. Don't offer list. Get seller closing costs. Get buy down in rates if you can. Ask for the moon. Your time is now.
Why not?
Yeah. And I don't know if you can do this quickly. If you can, great. If you can't, no worries. How about an investor loan? 25, 30% down. What are rates looking at? No points.
I'll pop that in because I've been pricing some of my own. The wifey and I and some investor partners see opportunity just like a lot of your viewers. So why not
get ready?
Why not be ready? And I mean, for most folks, my advice is like, if you have a number that works and you offer it and they don't accept it,
move on.
Fine.
Yeah.
If they accept it, you've underwritten it. It works.
Exactly.
I've had one where agent thought I would be sad that we didn't get accepted. No, it's fine.
On to the next one. On to the next one. That's what I hope investors are really getting at is we're learning what average is, only writing great deals. And if they say no, you just move on to the next one. Just rinse and repeat.
Is this right? Okay. 25% down. And if the investors that know, like there's a big enough spread between 20 and 25, you want to be putting 25% down. If you have to only put 20, great. But I'm pricing everything at 25.
Yes.
My wife asked me last night too. She goes, could we put 20% down? I go, yeah, but
no, we're not going to.
25 is our number.
Yeah.
Is this right? Could this be right? Oh yeah, this is right. Low 6s. We'll call that 6.25 without any points.
Right.
On investment properties specifically,
sure.
Ask the seller to pay a couple points.
Yeah.
You can get a single family investment property, 25% down, 5.5% rate.
Nice.
And that's what it might take for the thing to be a
work.
good deal.
Yeah.
2 points being paid by the seller. And in this case, I just had a plugged in price of 545.
Sure.
So when the loan amount is 408, for people that don't know how points work, 2% of that, basically you need an $8,000 credit.
Yep.
It's not a lot,
No, exactly.
Give me an $8,000 credit. I'm going to use it to buy my rate down to 5.5.
Yeah, to be very clear, all my investors were only writing great deals. Good left the building. We are getting seller to pay closing costs, and we're getting all sellers to buy down rates, especially if we're getting 30-year money. Might as well ask for the moon. If they say no, move on. Matt, how can people find you and see what works for them?
Go to greatmortgagebroker.com. For whatever reason, I'm getting more and more people that are like, I just want to have a rough idea. I don't want to pull credit. I don't want to get pre-approved. I'm just not in the business of providing no value and having you out there shopping with blinders on, right? If you're in the market, you want to get pre-approved, my staff's going to spend hours. I'm going to spend $37 on a credit report. I'm fine with all that, whether you buy or whether you don't buy, but get yourself pre-approved, whether it's with us or somebody else. With us, greatmortgagebroker.com is where you start. That way, you know what you qualify for, you know your numbers. It frustrates me to no end, Mike. I've got people putting in offers. We review the stuff and we're like, you
Can't
don't
do this.
qualify. You don't qualify.
Like, no.
Whoever advised you to submit an offer and whatever agent was willing to write it without you being pre-approved, not the way to do it. Get the numbers figured out first. Then you'll have an idea too where rates are at and what you can get based on your specific scenario, and then back into what you can offer on a property.
Absolutely. Thanks, buddy. Greatmortgagebroker.com.
Yes, sir. Thanks, Mike.
Awesome. Thanks.